We are back on the Farm Bill this morning. This time, we are talking with the author of the Senate GOP Farm Bill Framework. What are the odds the bill will wrap up negotiations in the Senate Ag Committee and be put forward for a committee vote? We'll find out. And let's talk interest rates and what to expect the rest of the year.
Live from the rest of the year via Farm Journal Studios, this is AgriTalk. This morning we begin with a conversation with Senator John Boozman of Arkansas. Then it's Dr. Vince Malanga from LaSalle Economics. I'm handsome newsman Davis Michelson, and now here's the host of AgriTalk, Chip Flory.
Man, wouldn't that be cool if you actually knew the rest of the year?
Yeah. I can't really talk about it. But yeah,
you can't?
We're here now. Yeah, we are in the rest of the year right now already. I don't know if people noticed or not.
I see.
The shift is subtle. Yeah.
Did you have to sign some kind of a non-disclosure agreement? Just
I'm afraid
because
I did.
You know the rest of the year doesn't mean that you can tell everybody about it.
Exactly. See, and NASA's involved now. It's a whole thing.
Once
I've
they're
said too much already.
involved,
I know.
Once they're involved, it's all a big cover-up, right?
Well, I'm just trying to get in good so they'll review your astronaut application. That's all. It's for you, buddy.
Dude, don't you worry about me. I'll take care of that myself.
I don't know. You should have been in space years ago if it was going to happen, dude.
Boy, you got that right. The only way I'm getting in now is if I buy my way in.
I'm sorry. That's too much truth too early. I'm sorry. You'll get there, buddy. I believe in you.
Welcome to AgriTalk. I'm Chip. That is Davis.
Good morning.
Man, oh man, I'm starting to think that there is greater odds that I will be accepted into the space program than there are that we will get this farm bill done in 2024.
Oh no. Okay, that is what it sounds
like.
So
now you're telling me I don't stand a chance.
I'm not saying that at all. No, I'm afraid not.
We're going to find out from Senator John Boozman from Arkansas. He's the ranking member on the Senate Ag Committee. Jim Wiesmeyer is going to be joining us for that conversation coming up here in just a little bit. And then at the bottom of the hour, interest rates. Where are they going? What signals did Dr. Vince Malanga take from the last FOMC meeting regarding the attitude of the Fed and their plans? What exactly? I shouldn't say what exactly. Nobody knows exactly what the Fed might have in mind for the rest of the year. But what are they looking at? What are they watching for? What might happen between now and the end of the year on interest rates? We're going to talk with Vince about that coming up here in just a bit.
Can't wait.
All right. Lots of news. Let's get to it.
Indeed, we'll start with the weather. Scattered, strong to severe thunderstorms capable of producing damaging winds, hail, and heavy rainfall will be possible this afternoon over the upper Mississippi Valley and Central Plains. A low-pressure system in the western Gulf of Mexico will bring heavy to excessive rainfall for much of South Texas. A dangerous heat wave will impact much of the Midwest to the northeast through this week. Chip, currently 82 degrees, windy, sunny, and angry outside. It's super sticky right now in KC.
And you're going with angry outside.
Angry, yes.
Got it. All right.
Yep.
We keep an eye on the weather for this afternoon and into this evening, because it looks like there is a chance for some severe weather along that front as it makes its way across the Midwest.
Well, and we don't need to tell farmers, when it gets hot and sticky and close and humid like this, man, those storms can pop up out of nowhere sometimes.
Yeah, and heads up on the winds. I mean,
yes.
I know that we've been dealing with wind a lot this year, but it should be in your plans if you're going to be taking anything out on the road or planting anything in the field for today. So There's some dust storms out there already.
For sure. Well, let's talk about highlights from USDA's crop progress and condition update as of June 16. Corn, 72% good to excellent, 2 points behind last week. 93% emerged. Soybeans, 70% good to excellent, 2 points behind last week. 93% planted, 82% emerged. Talk about corn and soybean conditions, Chip. We're falling back just a little bit.
Just a little bit, but take a look at the poor to very poor. We had a great conversation about this with Carl Setzer yesterday on the afternoon hour of AgriTalk. Yes, we need to pay attention what's in the good to excellent, but that probably doesn't tell us about yields as much as focusing on the amount of crop rated poor to very poor, and right now that rating is very low.
Yep. Well, spring wheat, I've got 76% good to excellent, 95% emerged, 4% headed. Cotton is 54% good to excellent, slightly behind last week, 90% planted. And winter wheat, 49% good to excellent, compares to 47% last week, and 27% harvested. That compares to 14% on average.
Making big progress, and the pressure of harvest has been showing up in the markets.
Yep. Well, a Bank of America survey indicates global investors are likely to continue investing in U.S. equities as the market hits new highs. The poll of 206 participants managing $640 billion in assets revealed the highest investor optimism since November 2021. Well,
it's so passive. The investing that happens now, I would assume a majority of it is very passive. In other words, 401k, I'm guilty of it.
Yeah.
A lot of people are guilty of it. So it's of course the investment is happening as we're making new highs.
Yeah. Well, not guilty of it. I don't know if guilty is the right word, but yeah. U.S. retail sales rose by a modest 1/10 of 1 percentage point month over month in May, following a downwardly revised 0.2% decline in April, and it fell short of a 0.2% forecast. Sales saw significant increases in sporting goods, hobby, musical instruments, and books, as well as clothing and motor vehicle and part dealers. Gasoline station sales dropped 2.2%. Furniture store sales off 1.1%, indicating cooling consumer sentiment. A lot of that musical instrument money is from me, actually, Chip. I don't know if that should be in there. That's me.
Yeah. West Music is saying thank God for Davis Michelson.
They send me a Christmas card.
Yeah.
The U.S. dollar is approaching a new 2024 high as investors seek a safe haven amid political uncertainty in Europe and elevated U.S. Treasury yields. A bipartisan group of 18 senators is urging EPA to set higher biodiesel and advanced biofuel mandates for 2026 under the Renewable Fuel Standard. Despite record high levels for 23 through 2025, new evidence suggests the need for significantly higher volumes to match increased production capacity. They highlighted a 66% drop in renewable identification numbers, or RINs, since last year's levels were set, leading to facility closures, job losses, and disrupted local economies. Chip, what the heck's going on with this?
Yeah, I'm not exactly sure, Davis. I wish I had a better answer for you, but I think what they're saying is that the production pace on the bio-based diesel is stronger than what was planned for in the mandated use levels in the RFS. So let's make the mandates line up with the production.
Well, finally here, Chip, the top U.S. and oil and corn industry lobby groups are suing the Biden administration over its plan to slash emissions from heavy-duty vehicles, arguing the regulations will cause economic harm. Ryan Myers from the American Petroleum Institute noted, quote, the EPA is forcing a switch to technology that simply does not presently exist for these kinds of vehicles, Chip.
All right. Thank you very much, Davis. Karen Bonert, the editor of Farm Journal's Milk, couldn't join us today. She wanted me to let you know that they are having a free webinar on Wednesday, June 26th. It's going to be focused on the outlook for the dairy industry. She's got a great panel lined up. Check it out at www.dairyherd.com. Senator Boozman next.
You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG.
Welcome back to AgriTalk. I'm your host, Chip Flory. Glad that you are with us on this Tuesday morning. Jim, we're having just a bit of trouble connecting with the senator. We're going to get that taken care of here in just a moment. We've got Jim Wiesmeyer, who is the pro-farmer policy analyst and a regular here on AgriTalk. How you doing, Jim?
Pretty good, Chip.
Good. Yeah, we're going to get the senator on here. Now, just as a reminder to everyone, U.S. Senator John Boozman from Arkansas is the ranking member of the Senate Ag Committee, and he released the framework for the GOP of the Farm Bill last week. And there's some big differences between what is happening in the GOP framework versus, geez, Jim, is it a text from Chairwoman Stabenow, or is it just some ideas?
I think it's an expanded framework. They have not released the total text nor the scoring for the chairwoman's bill.
Okay. All right. Now, the scoring. What is the status of that? And by the scoring, what we're talking about is what exactly this bill would cost over the next 10 years.
Yeah, the baseline for the Farm Bill in the Congressional Budget Office baseline is $1.5 trillion, Jim. That's over 10 years. Now, interestingly, we get an update of CBO's baseline today. However, that won't impact the current Farm Bill negotiations because if you'll recall, G.T. Thompson on the House side got his bill through the committee by the end of May, and that's really one of the reasons why he wanted to get that done. So even it could present more problems later this year or next year if we don't get a new Farm Bill this year, because then it'll go to a new Farm Bill baseline.
Yeah. Okay. This whole process, it was supposed to be a 23 bill. There's not very many odd-numbered years out there on a farm bill. The last bill was supposed to be, I think, was supposed to be a 17 bill, and it turned into an 18 bill. Obviously, the 23 bill has turned into a 24 bill, and it might end up being an odd-numbered bill because it'll slip into another year, right?
It could be, but we still have, even after the November 5th elections, we'll have a lame duck session of Congress, so you still can't rule one out for this calendar year, Chip. We'll have to see.
Okay. All right. Let's talk a little bit about the differences between what was released in the GOP framework and what we know is in Stabenow's bill from the Democrats on the House Ag Committee. And the big difference is in Title I, isn't it, Jim? That's where
it is. And
and
the degree to which reference prices, that's the old target price for those long in the tooth, are reflected, because Stabenow would only increase them 5% and only for selected commodities, where the average increase in Boozman's bill is 15%. He even didn't include per commodity reference prices, Chip, but an average of 15, and that's a big big difference on the Title I safety net.
Exactly. All right, we've got him. U.S. Senator John Boozman from Arkansas, ranking member of the Senate Ag Committee, joins us right now. Senator, welcome.
Well, thank you so much for having us. Very much.
You bet.
Appreciate you and appreciate your show.
Oh, thank you. Appreciate that. Okay, what is it going to take to get a committee vote on the bill? Is it possible?
I think it's possible. We've got something that happened in the House that people said was impossible, and that was Chairman Thompson creating a bill that was bipartisan. And so we have that coming out, our framework, the chairwoman's framework. So hopefully now we can kind of come together and get something and get it voted on and give the surety that our farmers desperately need as they go into, kind of a generational trying time.
Right. Senator, we also have pro-farmer policy analyst Jim Wiesmeyer on the line with us. I know that Jim's
Jim.
concerned about the scoring here. Go ahead, Jim.
Well, today we're supposed to get an update from the Congressional Budget Office, and we'll get a new Farm Bill baseline. But now I know that will not impact the current negotiations. Am I correct? That would only happen if you have an extension and have to go into a whole new negotiations, right?
No, you're absolutely correct. Yes, sir. Mm-hmm.
Okay. We're the farmers I've been talking with, they're frustrated now, as you are probably. It looks like we're in a total a pause here, where they see between now and and the next few months, why don't why isn't there more activity on this issue?
Well, we've just got a real difference of opinion. The farmers have had the greatest loss of income in the last 2 years ever. We've got a huge trade imbalance now. That used to be the silver star of trade, was the fact that we had a trade surplus in agriculture. Now we're running a deficit. It's projected to be even bigger this year. And the list just keeps going on. Significant increases in input costs that are going to continue to rise for a while. They're not going to go down. And then every chart I've seen has commodity prices probably continuing to drop. So it's a bad combination. And so, as I've said, we simply have to put the risk management tools in place to make it such that we can get our farmers up to where the country is now. Since March of 2021, when inflation started, the world is totally different. The 2018 Farm Bill that we're living under now, much of it was derived from 2012 data. So it's simply outdated, and that's going to cost some money. We've got to, just like everything else, has cost money in businesses and government. But in order for our farmers to continue to have the ability to go down and borrow the money they need, they're going to need they have to have an updated safety net. Along with that, we can talk about trade, how important that is. We're doubling the programs that help our farmers. This administration doesn't seem to be interested in trade at all. Trade is the lifeblood of agriculture. Research is so very important. So the conservation title, getting it straight. So all of these things we simply have to do. Right now, the Democrats seem to be, just concerned about protecting the status quo.
Yeah, it appears to some that the Democrats don't think that you Republicans can get this bill through the House.
Right.
Are there any odds now that GT will be successful in, number one, getting a House floor vote, and number two, getting the votes needed to clear it?
Well, we worked together very closely with him. I was in the House for 9 years, and besides him being a great leader over there, he's a good person, and nobody's worked any harder, both with making inroads with his colleagues and throughout the country. So no, I think they've got a good chance. As I visit with members, and I've been out and about as much as anybody, but visiting with members of Congress, both in the House and the Senate, the good news is the average congressman, the average congressperson wants to get a farm bill done. And so, we need to do a little horse trading to get there. But no, I think that he's got the ability to do that, and certainly that would be really helpful.
If that would happen, Senator, if GT gets it done in the House, would that encourage more activity in the Senate, or is it still kind of a drag your feet?
Yeah, it would for sure.
Okay.
No, I think all of these things, for most of our states, agriculture is number one. In Arkansas, it's 25% of the economy. That's true in most of our states. It's not number one in Texas, but it's like one in 7 jobs. It is huge. And so because of that, members really do want to get something done. I think this will continue to put pressure on them to give the farmer, the ability to have some certainty for the next 5 years. People talk to me and say, Senator, we got to get something done. And I agree with that totally, but we've got to do the right thing. We could pass a bill very much like the 2018 bill, which was really a tweak of the former farm bill. It had some policy changes, but it was a tweak. But we need major changes, to get farmers up to snuff because of inflation, because of the world that we're living in now. If we don't do that, we're better off not doing it for a while.
Yeah, and that's why your framework for the bill and the changes on Title I and the reference prices has been labeled as a farmer-friendly bill. And Senator, we certainly appreciate you making time for us and coming on and talking about the process. We'd love to have you back sometime soon.
Well, I'd love to be back, and thank you all very, very much for having me.
Absolutely. Thank you. That is U.S. Senator John Boozman from Arkansas and Pro Farmer Policy Analyst Jim Wiesmeyer. Guys, we're going to be right back. Conversation with Vince Malanga from LaSalle Economics next here on AgriTalk.
Time for Markets Now with the experts from Pro Farmer.
Joining us now, Pro Farmer editor Brian Grady. You know what? I didn't know exactly where I wanted to start with you, Brian, but let's just get wheat out of the way because it's lower again.
Yeah, absolutely, Chip. Not heavy pressure by any means, just
Right.
mild selling here at mid-morning. But the theme is that just continues to erode here. So more hedge pressure, more seasonal pressure as we rapidly move through harvest, the winter wheat harvest. Yeah. And you know, that's kind of the theme here, and just unrelenting selling at the moment, and probably more downside risk here short term.
All right, soybean oil seems to be reacting to crude oil's WTIs climb back above $80.
Yeah, absolutely. And seeing really good strength across the soy complex this morning. Soybeans have regained most of what they lost yesterday. Not all of it, but big gains, especially in the front end of that market. The meal market's trading solidly to the upside. And like you said, soy oil, it's about 75 points higher in the front end of the market, leading the way.
That's helping out corn.
Absolutely, and the corn market has regained everything it lost yesterday, basically. So it's actually performing a little bit better than what soybeans did, but soybeans performed much worse yesterday.
Right. Yeah, absolutely. Okay, over to the livestock trade. Boy, there's lower prices across the board.
Yeah, so the cattle market tried to work to the upside initially, but that didn't last long, and now we're seeing seller interest build, especially in the feeder cattle market. So because of the strength in corn this morning, feeders are posting sharp losses, and we're seeing them mark new lows as I talk here this morning. Live cattle, let's call it slight to moderate losses in most of those contracts, but also seeing seller interest build. And then hog futures are under pressure aside from the far deferred contracts.
Excellent. Thank you, Brian. That is Pro Farmer editor Brian Grady on Markets Now.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
Welcome back to AgriTalk. Great conversation there with Senator Boozman from Arkansas about what's going on with this farm bill. I didn't hear a whole lot of optimism, Davis, that this is going to get done in 2024.
No, I did not either.
Looking for a way to push things.
Yeah. And GT might be the guy to do the pushing.
Exactly.
You know, that's the thing.
Yeah, it's very interesting to, the kind of, I don't want to call it gamesmanship because that kind of, it doesn't give it the kind of importance that, of course, this has got. But it's
not wrong,
interesting,
though.
the gamesmanship that's happening
Yes, sir.
on this farm bill. Oh, man. All right. Dr. Vince Malanga, the president of LaSalle Economics, joins us right now. We're going to be talking about interest rates and what to expect the rest of the year. Vince, it's great to talk with you again. How are you, man?
How you doing, Chip?
Good.
Hey, listen, if the farm bill can buy Biden some votes, don't discount it.
Well, you got a great point there. Okay, you're giving me something to think about right there, Vince, because if Stabenow gets her marching orders and it is, listen, this farm bill, if we can get it done, would help us get some votes, then yeah, you're right. It would be back. It would climb up her priority list in a heartbeat, wouldn't it?
They certainly don't have any shame.
Oh, gotcha. Oh, man. Now, okay, Vince, FOMC meeting last week. They made no changes on the interest rates or the monetary policy, and it doesn't sound like they're showing much urgency to make any changes in the near term. Is that what you saw?
Well, no, not exactly. The next meeting is the end of July, and there's a lot of data to come out between now and then. What I detected in the last meeting was a rather subtle shift in their thinking that, it was all about inflation. We got to get the inflation back to target, et cetera, et cetera. Now I think what you're starting to see is, inflation's coming down. Now we have to start watching the economy carefully. And so it's back to the dual mandate, and an easing of labor market conditions would, I think, encourage them, especially in front of the election, would encourage them to cut rates even if the inflation target is not yet met.
Okay, what is the inflation rate right now? What are you looking at, CPI or producer price index? What exactly are you looking at?
Well, pick your poison. There are so many different measures, but the one that they look at is the personal consumption expenditures deflator, and that will come out at the end of June, and then another one toward the end of July. And basically, that's running between 2 3/4 and 3%. I think it'll be a little bit sticky for another month or two, but I think it will come down, and we'll be at worst, I think, 2.5%. By the end of the year, maybe even a little bit lower.
Do you think Powell and the board members are hearing from consumers about the affordability of things? The higher costs of owning a home, the higher costs of owning a vehicle, the affordability issues.
I think the affordability issue is a major constraint on the economy in here. There's not much that they can do about that in the short run, but it's clearly showing up in the data. You're starting to see a trend toward weakness in consumption. The housing market is basically moribund. And, the result of that is I think that you're going to see a slow erosion in the labor market in here. And I think, the unemployment rate hit 4% in the last report. Mm-hmm. I suspect it'll be higher than that in the next report. And I think that's why I say I think it's back to the dual mandate. It's not just inflation. It's also the condition of the economy. And the condition of the economy is softening. And I think that possibly could hasten a rate cut and push it up toward the July meeting.
Okay, so do you use the GDP, the gross domestic product, as your measure of the economic growth?
Well, I think what you want to watch most carefully is the one that comes out most frequently, which is jobless claims, initial jobless claims, which comes out every Thursday morning. And there was a spike in the jobless claims measure last week. I suspect it won't be that great this time around, but I think the trend in jobless claims is up. And if the unemployment situation is softening, especially 3 or 4 months before an election, I think you're going to start to hear some people yell and scream at the Fed that they've overdone it, stayed too long, blah, blah, blah. You better cut rates. And the ideal time for them to do it now would be the end of July, because there's less of a political overtone if they did it in July as opposed to doing it in September. So that's why I'd say there's maybe a 25% chance that they could cut the rate in July. But I think regardless, I think we're going to see at least 2, maybe 3 rate cuts before the end of the year.
Okay. 2, maybe 3 before the end of the year. Okay, I got to back up just a little bit, because I see this from JPK at the White House press briefings. The White House messaging on inflation is, don't worry about it. Wage gains are keeping up with inflation. Is that true?
Well, I don't know who she's saying that to, but wage gains are still behind inflation. Although in the last couple of months, because inflation is coming down, you got a little bit of an uptick in wages in the last report, largely because they decided to pay fast food workers in California $25 an hour. Yeah. But that won't last. And so, it's more a case of stagnant wages in real terms, okay, which is actually an improvement from what it was in the past year and a half.
Okay. Back to the housing issue, what do you make of the current condition of the housing industry? What's it telling us about the overall economy?
Well, the housing market used to be a leading indicator, and because it was sensitive to interest rates. And I think you have 2 problems. You have 2 problems going on in the housing market. One, of course, is sticker shock. Prices are high. mortgage rates, maybe not high historically, but certainly high relative to anything that we've seen in the last 8 or 10 years. And on top of that, you look at all the fixed costs that have gone up. You talk about 2.5%, 3% inflation. You tell me how much your utility bill has gone up in the last year. How much has your car insurance bill gone up in the last year? How much has your real estate taxes gone up? Those things have all soared relative to the rate of inflation, and that all gets built into the calculation of your monthly payment. And so I think it's a real affordability crisis, especially for first-time home buyers in here. And as I say, housing used to be a leading indicator, but not this time.
Right. You talk about the affordability issues with property taxes. Some of the conversation that I've seen out on social media about property taxes across the country, a lot of it starts in Nebraska and then just kind of explodes out of there. But man, oh man, the assessment levels on some of these properties now is just incredible. It's criminal what they've done.
And they pale in comparison to what's happened to your car insurance and your homeowner's insurance.
Yeah, dude, it's crazy. It's absolutely crazy. Talk to me about China. What's your focus?
Well, I think the Chinese economy is still stumbling and mumbling along. You're seeing capital flight from China. New business formation is weak. The economy's been going down there for a year and a half, so I think you're sort of floating along the bottom in here. I don't see any evidence that the real estate market is really improving in China, but at least the deterioration has been halted.
Okay. There's all kinds of talk, when you look at the relationship between Russia and China, getting away from dollar-based trade to yuan-based trade. Is the dollar going to lose its default currency status?
Well, the dollar has been there's two things associated with that. Number one, the dollar has been a strong currency because the Federal Reserve has sort of been sticky, and the U.S. growth rate has been okay. But the dollar has been particularly strong against two particularly strong manufacturing competitors, i.e. Japan and China. And I think one of the surprises here in the second half of the year is that the manufacturing gets hit on the export side simply because of the competition from the weaker currency economies. The other thing is, no, I think the dollar will retain its reserve status. Sure, you're seeing some fraying at the edges, but a lot of that can be cured with the right political policy or national security policy that gets implemented. And for that, I guess we're just going to have to wait and see.
Yep. What are the tea leaves telling you about this November and the presidential election?
God, who knows? Polls are polls. You can believe them. You can disbelieve them. My sense is that the Republicans have a lot of momentum. But we all know in 4 or 5 months, a lot of things can change. And they always say that the public doesn't begin focusing on the election until Labor Day, and they don't really intensely focus on it until after the World Series. So we got a ways to go.
We do, no doubt about it. Especially if playoffs go 7 games, that's gets us right up to the elections. Vince, thank you, buddy. I appreciate you.
You bet, Chip. Take care.
All right, Dr. Vince Malanga, the president of LaSalle Economics. Davis and I will be right back.
When news breaks, the newsmakers talk about it on AgriTalk with Chip Flory.
And welcome back to AgriTalk, everybody. Your pal, Davis Michelson. I just got to do this. It's going to fade. When I hear that AgriTalk. Huh? Am I right?
Fantastic.
Yeah, baby. Your pal, Davis Michelson. Chip Flory here as well. Wow. We got Senator John Boozman to talk about the Farm Bill right here on AgriTalk this morning with our own policy analyst, Jim Wiesmeyer. Your takeaways, sir?
Boy, like I said at the start of the last segment, I didn't hear a lot of optimism that there's going to be a bill done. It almost feels like, did I hear him trying to throw the ball back into GT's court?
Mm-hmm. It felt like that.
It did, kind of if GT can get this done in the House, it's going to put pressure on the Senate to take some action.
Yeah.
And even though GT is the progress in the House is ahead of that in the Senate, it's almost like I could feel Senator Boozman saying, Chairman Thompson, keep pushing, get it to a floor vote. Mm-hmm. Let's get it passed by the House, and then we're going to have to get something done in the Senate. And, I guess that is Senator Boozman cheering on his party members over in the House and saying, let's make this farm bill happen.
Yeah. Let's take that and ease on over to the conversation with Dr. Vince Malanga, who believes miracles can happen during an election year, Chip.
Boy, wouldn't that be something? If all of a sudden the White House decides getting a farm bill done works to their advantage, Senator Stabenow, get this done. If you get that message from the White House, well, then it's done. I mean, they'll figure out a way to make it happen. Right now, one question that I did not get to ask Senator Boozman, and we'll get a chance to ask him this question, and we'll bring you his thoughts on it if we don't get him back on the air anytime real soon. But I wonder where the farm bill is on Senator Schumer's radar. Senator Grassley brought it up a couple of times yesterday and basically said, listen, we can't make this happen unless Schumer wants it to. It could be that the only way this gets on Schumer's radar is if the message from the White House comes down and says, get this done. And if that happens, well, then Schumer's going to, first things first, Schumer's going to slap another piece of cheese on a raw burger and then he will salute and say, yes, sir. Thank you, sir. How many more of these can we get done for you?
Yeah. Yep.
Yeah.
Why is it? Well, we're speculating now. I mean, you would want to do that if I was running for election or re-election, I guess. I would want to time stuff like that very carefully. If we're gonna play election politics with this sort of stuff,
well, yeah, it makes you wonder if it's
do it right.
It makes you wonder if it's on the White House radar too.
Yeah,
doesn't
it? I mean, maybe we've been talking about this.
Why wouldn't you want to
farm
get
bill
this
for
done?
all this time, for all these months, and they're like, nah, just wait till August.
I mentioned JPK earlier. She loves to be able to get in front of the White House press corps and say, look at his legislative wins. Look at President Biden's legislative wins. Don't look at the cheap fake videos.
Right.
Look at the legislative wins. This could be another bipartisan legislative win if they wanted to go for it.
Yeah.
But for some reason, we're not seeing that indication that they want to go for it.
Yeah. Vince, okay, sort of along the same lines, miracles happen in election years. 2, maybe 3 rate cuts this year. Did I hear Dr. Vince Malanga correctly?
Yeah. Yes, you did. And if that is going to happen, a couple of things I think need to happen first. We need we need the July employment report to show us an uptick in the unemployment rate to above, not just 4%, but above 4% unemployment. So if we get that in front of the end of July FOMC meetings, that would be the first step in increasing the odds that there could be an interest rate cut to spur economic activity and to grow the job base, okay, and to encourage hiring. That could be the first thing that it takes to get that job, the interest rate cut at the end of July. I just don't. When you balance it against some of the other factors out there, and the other factors being inflation, you can't cut interest rates too aggressively in this inflation environment, because if the goal is as of stated at a 2% inflation rate, lowering interest rates now when we're at 2 3/4 to 3% is not going to help you get back to 2%. So, it's that dual mandate that Vince was talking about. If it was just the inflation rate, there would be no interest rate cut. But because you've got to consider the employment rate as well, maybe there is reason for an interest rate cut.
Here's this. McDonald's ends AI drive-through experiment with IBM. Real people in the drive-through windows at McDonald's now. Got to have humans.
Yeah,
apparently the AI drive-through didn't work. But
that person could be in Singapore. We don't know.
Well, that's possible. Outsourcing and whatnot.
If it's going to cost you $25 to put the person in there, or $20, excuse me, not 25, $20. It's going to cost you $20 an hour to have somebody in there to take an order. Maybe you do it with somebody in Singapore. Hey, thanks. Come back this afternoon. Sam Hudson, Corn Belt Marketing.